Welcome to the Boomer Solution for Real Estate and Beyond, offering resources and solutions for boomers and their families. From minimizing obstacles to maximizing results. With your hosts, Marlena Urick and Marie Wallace. Together, they have over 25 years of experience in the real estate industry. Both are licensed realtors with memberships in the National, California, and Sacramento Association of Realtors. Although they hold multiple designations between them, they are most proud of the Seniors Real Estate Specialist designation, or SRES. With this designation, they are able to keep up with the trends that affect the baby boomer and their families. Known as advisors and mentors to their clients, helping them make the best decision for their real estate needs. Marlena and Marie also conduct seminars throughout the area to educate boomers and their families on the current trends for the 50-plus market. For more information, go to their website, theboomersolution.com. Welcome to the show.
Welcome to the Boomer Solution for Real Estate and Beyond. Hello, I'm Marlena Urick, and I'm one of your hosts today. And I'd like to officially introduce myself. I entered the world of real estate in 2015 as a real estate investor and completed over 200 hours worth of real estate investor coursework. I worked with investors for many years doing project management, I fix and flips, and actually during the process became a home stager. I was inspired by the work that I did and as an investor, but I decided to become a licensed real estate realtor with EXP in 2018. I'm also a member of the National State and Local Realtors Association here in Sacramento and a member of the Women's Council of Realtors, where I'm the chairperson of the Education Committee. I have a doctorate degree in educational leadership and also an award-winning speaker and author. My newest book is The Secret Sauce of Downsizing, which made the #1 international bestseller list. I've earned the first-time home buyers certification and the prestigious Seniors Real Estate Specialist designation for working with seniors. I'd like to introduce my co-host, Marie Wallace.
Hi, everyone. I'm Marie Wallace, and I've been a licensed realtor since January of 2000. I've been a member of the National California and Sacramento Associations since then. I hold many designations, including the Seniors Real Estate Specialist. I'm a graduate of the Realtor Institute, Referral and Relocation Certification, Career Compass designation, just to name a few. I've been part of the International Luxury Society as the founding member and a Masters Club member as well. In 2020, I was the president for Women's Council of Realtors Gold Country, which serves the Folsom, El Dorado Hills, and Placerville areas. And I'm a certified mentor for EXP Realty. And I am also a proud co-sponsor of Dave Ramsey's Foundations in Personal Finance with Sutter Middle School for the 2019-20 school year, as well as the 2020-21 school year. Marlena and I conduct seminars to educate seniors and their families on the current trends for the 50-plus market. And we're happy to introduce as co-hosts, the podcast, The Boomer Solution for Real Estate and Beyond. Thank you so much for joining us today. Today's topic is going to be about real estate retirement planning, taking advantage of the tax code. When you retire, you should reevaluate your real estate holdings to make sure you are meeting your current retirement financial objectives. We will discuss ways to take advantage of the existing tax code to meet those objectives. Today, you're going to walk away with how to transfer and keep your low property tax bases in California, how to use the 1031 tax deferred exchange, and how to reposition your real estate to better meet your retirement objectives. Marlena, why don't you introduce our guest speaker today?
Great. It's my privilege to introduce our special guest speaker, Russell Marsan. Russell has over 24 years of experience in the 1031 exchange industry. And he believes that advanced client education is the key to success. He's an accomplished, award-winning public speaker and has traveled extensively throughout the United States, giving thousands of entertaining seminars and lectures to attorneys, CPAs, realtors, commercial brokers, and investors on the subject of 1031 deferred exchanges. Russell has a unique ability to break down complex, in-depth issues such as 1031 exchange rules and regulations into an entertaining presentation everyone can understand and relate to. So Russell, before we launch into the 1031 exchange, we'd love to just start off with what's happening here in the state of California. Because recently, April the 1st, Proposition 19 went into full effect. And this totally affects homeowners who are age 55 and older and some other populations. So could you please tell us what exactly is Prop 19?
Yes, I would love to. Thanks, Marlena and Marie. Also, I'm sure your viewers are probably a little bit confused because when you introduced me, you said it was going to be entertaining, and we're talking about tax code. That's normally like an oxymoron, right? So,
right.
So I don't want to get their hopes. I don't want to set the bar too high for their expectations. So I'm going to share my screen here so we can show you a little bit about Prop 19 and. Yeah, that's a loaded question. What's going on in the state of California? I don't know if we have enough time to discuss all that, but certainly Prop 19 just came into effect April 1st. Prop 19 is a really beneficial proposition for the residents of California, the senior citizens specifically, for the most part. And what it is predicated on is really Proposition 13. Proposition 13 was passed back in 1978 in California, and that allows the reassessment of somebody's property taxes is based on a sale or a transfer of that asset. It's not just automatically reassessed to fair market value every year, which is really beneficial to California, owners of California real estate, especially if you're senior citizens, because if you bought a property for $100,000, 60 years ago, your property taxes are based on that, and it just, elevates a little bit every year, but it doesn't elevate to the extent of fair market value. So if you happen now your neighborhood you bought in for $100,000 many years ago, now your property is worth $1 million, which is not uncommon in California. Well, on a fixed income as a senior citizen, you wouldn't be able to afford the property taxes alone on that. So it really allows seniors to be able to keep their homes, for forever. And there's been some propositions in the past that Prop 19 has replaced that has allowed transfers of the property tax basis when they move a primary residence, but it was very restrictive. You could only really transfer the property tax basis within the same county. So you had to be moving within the same county or a reciprocating county, which there were few and far between. You could only do it once in your lifetime. You had to be 55 and above or severely disabled. And you had to buy for equal or less value. Prop 19 replaced all of those old propositions, and now it's much easier and much more beneficial to be able to move to another primary residence anywhere within the state of California. So I'll just kind of go over a high level of what Proposition 19 does. It allows transfers anywhere in the state. This is by far I think the best part of this proposition. So now, if you grew up in Sacramento with your kids, you bought something 60 years ago here and you raised your kids here. Now the kids are all adults and they live down in Southern California. And so you want to, there's nothing tying you here anymore. So you'd love to be able to move to Southern California, but you're a senior and you're on a fixed income. So if you buy a property down there, you couldn't afford to pay, go from paying $600 a year in property taxes to $9,000 a year in property taxes. So now you can move anywhere in the state of California. It doesn't have to be a reciprocating county. And then that's the greatest benefit. The second one is it allows more transfers. So in the past, if you were 55 and above, you could transfer this property tax basis within the same county, one time in your life. Now it's up to 3 times in your life. It also expands the reasons why you'd be able to transfer a property tax basis. So in the past, it was initially just 55 and above, and then they added severely disabled. And now, because of the recent disasters, specifically wildfires in California that have devastated homes, now if your home is destroyed by a disaster, then you also, no matter what your age, you do get to transfer your property tax basis. and you can buy up in value. This is huge as well. So, in the past, you could only buy equal or less in value. So if you're selling your property, this may be 2,000 square feet in Sacramento, and you wanted to move closer to the kids in Southern California, like in San Diego or something, well, you didn't need a big house anymore, but even buying a little house, 1,200 square feet or something, would still be way more expensive than what you're selling in Sacramento for. So you couldn't do it. Now you can. Now you can actually buy up in value. There is an adjustment. So you will pay, if you do buy up in value from whatever you're selling for, then you will pay a little bit more in property taxes, but still you won't get the full brunt of having to pay full fair market value property taxes. They also give you 2 years to transfer. So from the time you sell and buy, there can be up to 2 years in between those. And you can do it in either order. You can buy first and sell later, or sell first and buy later, just within 2 years. And then there is one negative aspect, and that is from a standpoint of being able to inherit properties. So in the past, you could only, if before Proposition 19, if I inherited properties, then, and if it was my parents' primary residence and they passed and I inherited their property, I could keep their old property tax basis no matter how I treated that property. And also I could inherit up to $1 million of other real estate besides their primary residence and keep that property tax basis. That's changed, right? So now the only thing I can keep their property tax basis is if I inherit their primary residence and I treat it as my primary residence also. If I keep it and just keep it as a rental property, it'll be reassessed to the fair market value.
Wow.
Yeah, that's good to know.
It's a really beneficial proposition.
Absolutely.
So now seniors can move anywhere in the state and move their property tax basis with them.
Love it. Love it. Thank you. Wow. So what do you suppose is the greatest benefit of Prop 19? Just what you said? And
yeah, the first two that I mentioned.
More choices.
Yeah, the first two that I mentioned are certainly the biggest benefits, and that is, you can move now anywhere in the state. That's huge. And also that you can also buy up in value now. That's also huge, because like I said, in a lot of cases, somebody's selling, in a less expensive area with a larger home, well, they're going to buy a smaller home somewhere else, but it's still going to be considerably more expensive because of the area they're buying into. So now that's not punitive, so they can go ahead and buy in those areas and still keep a low property tax basis.
Yeah, that's so awesome. And could you just clarify one thing? Like, does somebody get to keep the old property tax basis if they inherit a property?
Yeah, well, it kind of depends. In most cases, the answer is no, because like I said, in the past, if I would have inherited my parents' primary residence, then yes, I could have kept their property tax basis, even if no matter how I held that property. And then I could also inherit up to $1 million of other real estate besides their primary residence and keep their low property tax basis. Those were both changed. The $1 million extra property is just gone. It's eliminated. So now the only way I can keep the property tax basis on the property I inherit is if I treat that property as my primary residence.
Got it. Got it.
In perpetuity, by the way. So, I know what some of the viewers are thinking. Aha, I'm going to buy the property. I'm going to inherit the property, and then I'm going to move into it for a couple months, get that property tax basis, and then I'm going to move back out of it into my other primary residence. Not the case. So you do have to live in it in perpetuity. So as long as you live in it, yes, you'll get the old property tax basis. As soon as you move out, it'll be reassessed.
Okay.
Is there a
Thank you.
time frame that you have to live in the house before you could, like, I guess the next step would be you'd be selling it, but is there like a time frame, like you have to be in the house for a year or 2 years, or if you inherit the property, to be able to take advantage of the tax transfer?
So yeah, you would have to, as soon as you inherit it, you would need to move into it as your primary residence.
Okay.
Immediately, right? And then apply for the transfer property tax basis with the local assessor's office. And as long as you stay in that property, no matter whether it's 6 months, a year, or 10 years, as long as you live in it, you will retain that property tax basis. But as soon as you want to do one of two things, either you move out of it or you sell it. So if you sell it, you don't care because that's the new buyer is going to pay the new property tax, not you. But if you move out of it, the assessor has the ability to reassess it at that time too.
Okay,
But
so
I'm sorry, I just wanted to ask, if you're inheriting the property so you get to keep the tax bases while you're living there, do they get to transfer the tax base into a new property once they sell, and if they decide to purchase another property, or does that go away?
No, you should be able to. I believe that's a really good question. Though the proposition doesn't actually go into that specific, but I would imagine that you would be able to transfer because it's your property tax basis if you sell it and move into another property. But you'd want to check with your tax advisor to see.
okay, great, great. Thank you for helping us understand more about Prop 19 and how important that is to those of us that are 55 and older. And
Right,
now,
that's
Mar-
the big
I'm
question.
with you, by the way. I'm right there too.
yeah,
Yeah.
exactly. All right, now we're on to our next topic.
Yeah, Russell, let's discuss. This is another question that people don't understand. Let's go into the 1031 exchange. So let me ask you this: is now a good time to sell your real estate and cash out, since capital gains will probably be increasing?
Yeah, that's obviously the popular consensus is that capital gains is going to be going up. So, and I get, actually been doing this 24 years, so I get these questions all the time as far as, hey, capital gains are historically low. They'll probably be going up in the future. I hear that all the time, always have. I'm just going to cash out and sell my real estate. It's, if you're going to cash out and sell your real estate, you have to ask yourself the question, why? What is my financial objective with cashing out and selling my real estate? Because if it's just, I'm tired of the headaches of real estate, right? So I'm a retiree. I want to put my money into something very passive, safe, and conservative, right? So I'm going to sell my real estate and I'm going to go into muni bond funds, something like that, right? Okay, well, and that's what you do, is have to ask yourself, what's your objective? Why are you selling your real estate and cashing out? If it is just to reposition into something different that's more geared towards your retirement objectives, then don't cash out of real estate and pay your tax. Instead, just exchange into something else, some other type of real estate that better meets whatever your current financial objectives are. Because I promise you, whatever your financial objectives are, there's some type of real estate that will meet whatever those objectives are. So, and most people have a misconception about, how much they'll actually pay in tax if they sell. A lot of people are under the misconception that, well, if I just sell, I hear capital gains is 15%, so that's all I'm going to pay. It's physically impossible, especially for somebody in California, to sell a California property and only pay 15% in taxes. These are the current tax rates you see in this combined rate of taxes when you sell real estate. So yeah, capital gains currently is between 15 and 20%. That's probably going to be going up. That's for the feds. And that's determined on adjusted gross income. And then also the state of California, the uppermost bracket is 13.3%. And then you have depreciation recapture, which, you depreciate an asset while you own it. Well, all those years you depreciate it. When you sell it, you're recaptured on the depreciation you take if you just sell it and don't do an exchange. And that depreciation is taxed at a higher rate of 25% to the feds. And then the state's the same, it doesn't matter. Yeah, so the state doesn't care if it's appreciation or depreciation. They tax it as ordinary income, just like pretty much every other state does too. And then you also have the net investment income tax of 3.8%, which is, it's part of the Affordable Health Care Act, and it's been around as long as that has. A lot of people don't know about that because they haven't sold anything since it came into effect. So you really have this combined tax rate in California. It's not uncommon to pay 35 to even 40, upwards of 40% in total taxes. So you have to look at, if you're going to give up 35 or 40% in taxes when you sell a piece of real estate, and you're going to reinvest that money into a muni bond fund or something like that, well, you've got to get a 35% rate of return just to break even. right? And then on top of that, you've got to have a return on your initial investment too. So, there's it's a loss when you sell real estate and buy into any type of, retirement vehicle. So it's best just to reposition into real estate. So this is just very quickly, and we can have the slides here, so in the future everybody can look at it. But this is an example of selling with a 1031 exchange versus selling without. So if you sold $1 million asset that you fully depreciated, maybe your total tax is 35%. Well, if you sell that, you're going to give up $350,000 of actual money, right? All the future growth and income off that is gone. So that leaves $650,000 of proceeds. If you were buying up and reinvesting and getting a loan to do that, and maybe a 75% loan to value ratio, you could buy about $2.6 million. When in exchange, you don't pay any tax. So you have 100% of those proceeds to reinvest. You keep that $350,000 working for you. So you can buy so much more real estate and keep that money working for you, appreciating and growing income and whatnot. So this is just one example, of doing a transaction with a 1031 exchange. If you multiply that over all the buying and selling I will do over the course of my life, you'll see how much larger your nest egg is when you go to retire from your real estate. So yeah, not a good time to cash out and pay your tax, because there never is. As long as the 1031 is here, that allows you to reposition. It's the greatest wealth building tool in the entire Internal Revenue Code, right? It allows an investor to reposition their assets to better meet whatever their current financial objectives are without having to pay any tax.
Awesome.
Interesting. So let me ask you, I get this question all the time from clients. Can you clarify the confusing term of like kind?
Yes, I can. So there is, it is a confusing term. I'm a visual person, right? So if you told me that something has to be like kind, I visualize what I'm selling, and I think, okay, well, that's exactly what I have to buy. In a 1031 exchange, you can sell real estate and buy real estate, but those two pieces of real estate have to be like kind with one another. So a lot of people are under the misconception, well, if I'm selling land, I can only buy land. If I'm selling single family rental, I can only buy single family rental, commercial for commercial, etc. And it's not the case, actually. All real estate is like kind with all real estate, so long as it's held for business or investment purposes. That's the huge part. So if any of your viewers out there own raw land, like a 5-acre parcel or something, it probably has no cash flow coming in, right? You can't depreciate it, so you don't have that benefit. So your financial plan is you pay your taxes and hope it goes up in value. Man, it's great to let those people know, hey, you should sell the land, free up that stagnant equity, buy income properties like rental properties, commercial, industrial apartments, whatever. Now you have cash flow you didn't have before. Now you have depreciation, and now you have typically a better appreciating asset. So all real estate's like kind with all real estate, as long as it's held for business or investment purposes.
Great,
Okay.
thank you. So let me ask you this. Can someone buy a second home, vacation home, or primary residence with a 1031 exchange?
Yes, and this is also one of the little known facts in 1031. So as I just stated with the like kind, you do have to buy business or investment real estate. Two types of properties don't qualify for 1031. One is inventory properties like flips or builders that build spec homes and sell them. Those are inventory properties. They don't even get capital gains treatment. They just pay ordinary income on the any profit they have or gain. And the other type of property you can't exchange into is a personal use property. So that would be primary residence, a true pure second home that you don't rent out, vacation homes, things like that. And you already have the wonderful benefit. When you sell a primary residence, there's no need to do an exchange anyway, because you have the wonderful benefit of Section 121. That's that $250,000 or $500,000 capital gain exclusion. So typically when you sell a primary residence, you don't have any tax anyway. But some people would love to use an exchange to buy a primary residence, second home, vacation home, something like that. On its face value, you can't do it because it's a personal use property, but what you can do is go through a conversion process. The IRS created a safe harbor back in 2008 This is my favorite revenue procedure. Ever
Mm.
since I've been in this business, I love this revenue procedure. I have it sitting right next to my bed. I read it every night. It has a very happy ending. It gives me happy dreams. What it does is this is a safe harbor that outlines how you have to treat a property after a 1031 exchange before you can convert it to personal use. And it's a really great safe harbor procedure that's pretty simple. And I really want to stress the term safe harbor, right? Because the IRS, we don't see a lot of revenue procedure from the IRS that is titled safe harbor. Because a safe harbor means if you follow this recipe, you are safe from the IRS, right? Your exchange cannot be overturned. Normally, the IRS does not like us to feel safe, so they don't issue a lot of safe harbors. So if you follow this recipe, you're golden every time. And here's the recipe. So sell your couple rental properties that you would have a huge tax in. You sell your couple rental properties, you buy all of that, use all that cash to buy your dream home in Maui. For the first 2 years, you have to do two things. One is you have to limit your personal use to 2 weeks a year or 10% of the rental history, whichever is a greater time period. So that's the first thing you have to do is limit your personal use. The second thing you have to do is show rental income, but this is a really low minimum standard. The only amount of income that you have to claim mandatory is 2 weeks per year. That's it.
Wow.
So if you buy a dream property with this, the only thing you have to do for the first 2 years is limit your personal visits there, and then find a friend to rent it to for 2 weeks a year. Claim that on your taxes. After 2 years, guess what you got to do? Whatever you want. You can move into it as a primary residence. You can treat it just as a pure second home or vacation home, and your exchange is safe harbored. This is powerful stuff. A ton of people, especially for COVID for some reason, a lot of people are wanting to buy second homes and vacation homes now. And they don't realize that a 1031 exchange can help them accomplish that.
That's great information. Wow.
Amazing.
Thanks for sharing. Yeah. Let me ask you this. Should a retiree own single family rental properties in their portfolio?
Oh, great question. I get this one all the time. So here's the scenario, and this is a really common scenario. When an investor first starts out in real estate, they're young and aggressive, have very little money. Typically, the first type of property they buy is single family. Right? It's a rental property, a condo, something like that. Something that's a fixer, maybe has some sweat equity opportunities, because that's what's affordable. So they own it for 3, 4, 5 years, and they build some sweat equity in the property. So they've got some newfound appreciation, maybe $50,000, $60,000 of appreciation in the property. And it's maybe got some little bit of positive cash flow. So they're happy with it. They're like, wow, this has been a great investment. So now, in a couple of years, we now have $60,000 of extra money, building an equity in our real estate portfolio. So they think, well, let's keep doing this. So they continue to buy rental properties. So over the course of their lifetime, they buy 10, 15, 20 single family rental properties. They continue to buy them because that's the asset class they're comfortable with and familiar with. So they own those properties. Now, if I own 20 of those properties, I am now in maybe retirement age. I'm tired of the triple T's, they call it in real estate: tenants, toilets, and trash. So I don't want those headaches anymore. So I want to sell my real estate, and I want to just cash out and pay my taxes, right? And I'll just invest in this things like I talked about earlier, go into CDs, money market fund, muni bond funds, things like that. Well, once again, I'm going to give up 35 to 40% in taxes. No, instead, just reposition into real estate that gives you the financial benefits that you're looking for in retirement, and that is, maximum cash flow, because you don't care about appreciation so much anymore. You want maximum cash flow, and you also want less headaches of management. You just want to go passive, completely passive. Well, there's real estate that will do that. And by the way, a lot of people are under the misconception that single family rental properties, the primary financial objective of those is cash flow. That's absolutely incorrect, especially in the state of California. The primary financial objective for single family rental properties is appreciation. Phenomenal asset to invest in to build long-term wealth is the single family rental property. But from a standpoint of cash flow, no, not that good. If you actually analyze your real estate, and that's why, we're talking about this today, as a retiree, you really need to evaluate your real estate or reevaluate your real estate to make sure it's meeting whatever your current financial objectives are. You need to evaluate your real estate just like you evaluate any other type of investment vehicle you're in, right? So, and that's the great thing about Marlene and Maria. They can analyze your current real estate, your single family rental properties, and let you know what kind of cash flow you have on those properties, and then say, okay, well, great, it's not meeting your objectives. If you're after cash flow and you want to go passive, then maybe we should sell your single family rental properties and get into some type of asset class that'll provide you with better cash flow and go completely passive. And there's a lot of different vehicles out there. Most people aren't familiar with it because they're just familiar with whatever type of real estate they own. One of the most beneficial ones that's very popular now and has been for a long time is the Delaware Statutory Trust, the DST. And these are fractional ownership interests in institutional grade investments. So you're actually able to very easily buy into a 50, 60, $80 million asset that in the past, only institutional investors could afford to buy assets like that and reap the benefits. So that would be like, REITs or insurance companies, things like that. Now, because of this DST structure that was approved by the IRS back in 2004, so it's been around a long time, now small time investors can reap the benefits of owning triple net lease institutional grade properties and have better cash flow than they did on the house, plus go completely passive, because when you buy into one of these, it's completely passive. The only ownership duties you have is to check your bank account once a month as the money hits from the management company. So there's all different types of asset classes out there, but certainly if you're of retirement age, owning a bunch of single family rental properties is in most cases not the primary objective that should be wanted by a senior. They should move into types of properties that better suit whatever their retirement objectives are.
Great information. Yeah, I'm sure we have more questions for you. How can our listeners reach you after this call?
Right here, the information you see on the screen. So that's my cell phone number right there, the 530-755-8355. Because it's my cell phone, you can reach me no matter where I'm at any time. If you call me at, 7 o'clock on a Friday night, the first thing you don't have to say is, "I'm sorry for bugging you, Russ. I am a tax nerd, so by default, I have no life." So you can call me anytime with any questions you have. That's my email address there too, and our company website too. We're the largest intermediary in the nation. That's all we do is handle 1031s, and I've been doing it 24 years, so I'm a resource for you. If you need to, most people just want to talk on the phone. If you need to meet in person, we can actually accomplish that as well too.
That's great. I'm just going to repeat your email address so those that are listening will know how to get a hold of you via email, and that is Russell, RUSSELL.Marsan, MARSAN @IPX1031.com. So Marlena, thank you again, Russell. This was amazing, great information, and I hope our listeners will reach out to you to get some more questions answered for themselves. Yeah. Marlena, why don't you wrap up our call today?
Yeah, this has been amazing. I agree. Every time I listen to you, Russell, I learn something. So I'm hoping that our listeners will be able to replay this podcast or watch it as a Zoom so that they can really let a lot of this information settle in, because it's like there's so many options now that are available that we need to be educated about. And this really totally fits our goal for having this podcast by educating and empowering others to make really good decisions in terms of their real estate and their financial lives. So thank you again, Russell. It's been amazing to have you on our podcast here. And for our listeners, I wanted to let you know that Maria and I are going to be offering a complimentary discovery call, a 30-minute discovery call on how we can help you understand some of this information and also maybe give you some ideas about your options. And again, Russell is available by phone for individual consultation, etc. But people can contact us for their real estate needs, especially here in Sacramento. My phone number, 916-800-3295. And Marie, your contact information?
Thank you, Marlena. Mine, you can reach me at 916-397-5518.
So thank you again, everyone, for being part of the Boomer Solution for Real Estate and Beyond.
Everybody have a fantastic Friday.
Fantastic Friday.
Yes, thank you.
Thank you all.
And we hope you join us on our next podcast coming soon. And in the meantime, bye for now.
Bye for now.
Thank you for joining the Boomer Solution for Real Estate and Beyond. Our hosts can be reached at their website, theboomersolution.com, or individually you can reach Marlena at area code 916-800-3295 or at her email address of marlena.urick@exprealty.com. For Marie, you can call her on area code 916-397-5518 or her email address marie.wallace@exprealty.com. Thanks again for joining us.